even though there's this scare of a recession, clearly you guys don't care because everybody, you've been spending money just as much or even. Hey, what's up, everybody? It's your boy Juju, and welcome back to the 1% of Juju podcast, where we teach you the practical steps to live your life like the 1%. Back at it with another episode. As always, make sure you are subscribed, that you follow us on all podcasting platforms. Actually, just one is fine, but give us reviews, give us likes, like this video if you're watching on YouTube, but subscribe to our channel on YouTube. We are going up, we're excited, and we are on our way to becoming the #1 personal finance podcast in the world. I mean that when I say that, but let's dive right into it because we need to talk about an important topic, a huge topic. I think it's been on everyone's mind. You guys can see the thumbnail. You guys can see the title of the episode. A recession is near. Okay, why do we say that? Apple is down 20% off of its all-time high. Microsoft 25%, Amazon 41%, Facebook 49%, and Square 73% off of their all-time high. So what do we need to do? Panic mode has been activated, but let's discuss what we do in this time, what we need to do. And I guess like the simple answer would be like, right, like it's time to buy. Everything's on sale, buy the dip, all the things of that nature. But I'm actually here to tell you to pump the brakes on that decision specifically, right? So I think that we need to have a conversation about what a recession is, what that means, what it implies, and what that may mean for yourself, for your future, and things of that nature. But personally, the idea of a recession makes me laugh a little bit, and here's why. It's not really a funny time. I remember watching The Big Short, and at the end, like these guys that like guessed that this would happen and all of that, like some of them were celebrating, and then there's someone, I can't even remember which actor it was, but someone kind of stopped the whole thing and said, like, do you understand that if this really happens, it means that millions of people are going to lose their homes, be homeless, lose their jobs, their pension plan, their future, and all that, those things. So those things aren't really funny. But the idea of people panicking in the midst of this, or in the midst of the talk of a recession, is a little bit funny to me, and I will explain why. Okay, like the idea of people losing their job is not at all. That's not what I'm saying. But the panic mode that it ensues right now is a little bit, because a recession is a macroeconomic term. You know, we want to talk about what it is first, right? I'll just give you the Investopedia definition, and I'll put the link in the description, obviously, so you guys can look up a little bit more about this yourselves, and in the show notes and things of that nature. But a recession is a macroeconomic term that refers to a significant decline in general economic activity in a designated region. So the reason we're not in a recession just yet, you may be asking, like, well, all these things are down, all these stocks are down, my portfolio's down, crypto's down, all of these things. Why are we not in a recession right now? Well, the reason for that is because there needs to be a significant decline in other economic activities. There needs to be a rise in unemployment and a decline in, retail spending. So even though there's this scare of a recession, clearly you guys don't care because everybody, you've been spending money just as much or even more. So the reason I laugh now, the reason that it's so funny is because if we're too young to have been either employed or had any money invested or really have been impacted by, what happened in 2007 to 2009, and some of us have been impacted kind of indirectly, right? Like we've seen our parents struggle, our parents have to sell our homes and things of that nature. But the direct impact of like really our own money or ourselves losing our job, we haven't really felt that and see that. And a lot of the, a lot of us like haven't seen that or felt that, and meaning that over the past few years, we really have had the luxury of calling ourselves geniuses, right? Like a lot of what we've invested in and things of that nature, we make our parents look like fools. Like, look at them. We never lost any significant money or things of that nature. But obviously this is not to speak negatively about anyone, because I'm one of those people, but a lot of us have been, I don't sell courses, but a lot of us have been selling courses, starting podcasts, starting YouTube channels. Yeah, shout out to me. But I'm obviously one of them. But we've been calling ourselves experts over the past couple of years without necessarily having to go through a downtime and a period of downsize like we might be going on right now. So that's why very often I'm somewhat reluctant, right, to show my portfolio, to share my portfolio of like stocks, crypto, real estate. It's not because, you know, I have anything to hide or things of that nature, and I want to be transparent as possible. But my portfolio is more of a reflection of luck, timing, and discipline more than it is like skills and smarts and me knowing what the right house is to buy or what the right thing is the right stock to invest in or the right crypto is. It's more that I've been just investing diligently and saving my money, living below my means and all of that, those things for the past couple of years. And it's finally, it's paid off over a certain period of time. So it's easy to talk about my real estate portfolio when realistically, like I bought a condo, my first condo, I bought it for $10,000, which is literally all I had to my name. And it ended up going up like 200K over the course of 2.5 years, right? And I can't really teach you how to do that again when everything in the market has been going up 16% year over year over the past couple of years. Because you can't replicate that. Even if I tells you, oh yeah, just go buy a condo with, you know, all the money that you have invested, your journey might not be the same. So, right, and it's been the same for a lot of experts, so quote unquote experts that have been calling themselves experts over the past couple of years. And there's, you know, a lot of people that have been teaching all these things the right way, but I just think that it was inevitable that something like this was going to happen, and how we handle it, where we go from here is really important for us to talk about. So just understand that what we're going through right now, this is normal. It's not something out of the ordinary. It's something that we're supposed to go through. But everyone also will tell you, right, like invest, like there's going to be ups and downs, the waves, you know, ride the wave, and there's going to be ups, there's going to be downs, there's going to be all these different things as you go through your investing journey. But I think it's a lot easier to go through the waves, and when, you know, you get a one day when things go down and then 20 days where things go up, and you know, those waves are a lot easier to ride when it's a down, when it's the opposite, right, where it goes down, 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 and then there's one day that gives you a little bit of hope, and then down, down, down again. It's a lot harder mentally to actually go through that, right? So, and emotionally, especially when until you're actually in it emotionally, it's really hard to actually figure out how to ride those waves and how to, you know, be in those times. And even though every time, everyone that tells you about investing, they tells you bad times will come, bad times will come, bad times will come, until they actually come, it's hard to actually prepare for it and figure out how to handle that situation. So I'm here to tell you, don't panic, relax, okay? So easy, right? Don't panic. We fixed it all. But in all seriousness, you know, there's a couple things that you need to consider as you go through this period. And I'm not going to make this episode super long because I want really you guys to take the meat of this and really figure out, you know, how you take this information and apply it to yourself. So number one, if you made mistakes, just understand it's okay. You know, learn from them. Maybe you overstretched yourself. You took out a little bit too much debt to try to invest it, things of that nature. You know, obviously I've spoken about leveraging debt in the past. I've spoken about making sure that you respect your risk tolerance, but maybe you went a little too far. You know, you have too much money tied away in different investments. You know, just learn from it. Understand, you know, what you can handle and from like a risk standpoint, and adjust to that in the future, right? Don't stray away completely from investing any money, but also understand, okay, this was a little too much. Now I'm in a bad spot. Try not to panic sell if you out of your investment vehicles if you can. But obviously, you know, some situations might lead you to need to do that, and that's okay as well. There's a lot of money to be made out there in this world, and no matter how old you are or how young you are, you have time to make that back. You know, this is a learning experience, and that's a big thing, is you just need to learn from it and actually figure that out. Number two, I would say, I mentioned it, right? Try not to panic sell. If you're invested in solid, reputable, I don't know if that's how you say that word, companies, mutual fund, index funds, things of that nature, the reality is, history has shown that the odds are it will come back up, right? We can never guarantee it. You can never know for sure, okay, this will go back up in this amount of time. But there's, you know, time and time again, if you look at the history of the stock market, times like this are not uncommon. right? Like in times of economic downfall are not uncommon. Markets have shown to go back up, and this, what we're going through right now, there's no signs of anything being different than those times before, as much as we may think like, oh well, global pandemic, things of that nature. Nothing is really different. There's like things of that nature. There's been diseases that have slowed down the economy in the past. There's been tech bubbles. There's been real estate bubbles. All of those things have slowed down, right? Essentially, a little bit of what's going on right now, once again, is a bunch of people that have been getting rich a little too recklessly, and are just getting a little too reckless and more reckless. And it's time for the market to adjust. And that's why if you've been listening to this podcast, you'll know that, I'll always preach how important it is to understand your worst case scenario, right? If you've been someone that likes leveraging debt like myself, just always understand what you're putting at risk, right? I'm always in preparation for times like these where I'm like, okay, I know that I'm leveraging debt, but if things go bad, I know what is going on, what I'm putting at risk. And I'm not saying that right now I'm not going to adjust anything, right? Because you always adjust based on the times that you're in, to some extent, and I'll dive deeper into that now, right? Because from a business standpoint, I might just not borrow as much or spend as much now than I did before, because if you think about it, before I could borrow money at a 2.2 to 4% annual interest rate, and earn 15 to 20% annually. So that makes sense, or even more than that, right? So that makes sense to go out and invest, because the rest of the amount that is now mine. Now is my interest rate for borrowing is like 5 to 7%, and the return might only be 8 to 10%. Now that's the margin is too small for me to be willing to go out and take that risk, right? So might be a little too risky, might not make as much sense. So for the most part, not that much will change. I'll try to continue investing money, try to continue, being as diligent about my money, continue borrowing money, to be honest, and trying to leverage those things, but just in a different way. Number 3, I would say, please try not to panic buy. Right? We spoke at the beginning, the logical thing right now that a lot of people are going to tell you to do, buy the dip, all these things. Please try not to do that. Yes, stocks are on sale, and you might think like, I need to take advantage of that as soon as possible. That makes sense. But remember, a recession means that there's a decline in retail spending and an increase in unemployment. We haven't even reached that point yet. If we see a decline of retail spending, that means that a lot of these stocks might take even more of a tumble, right? If no one is buying anything, over like a lot of these retail stocks, they might just go down even more over time. That also means that there might be a rise in unemployment at some point. You don't know if you're going to be impacted, if you're not going to be impacted. I don't wish that on anyone. I don't hope anyone that's listening to this right now loses their job, but that's also a possibility. So the best thing to do is continue to have, what we discussed before, which is dollar cost averaging, right? Continuing putting a certain number that you feel comfortable with in the market every single month, every year, every week, on a consistent basis, every quarter, whatever works for you and whatever you've been doing, try to be consistent with that. Obviously, continue keeping 3 to 6 months of expenses just tied away in savings, and try to live as normal as possible. And the last thing I'll say here, try to be in the moment. Try not to stress too much to what could come and what could not come, because that will absolutely drive you crazy. And we don't even know if a recession will actually come, right? We're speculating. A lot of experts are talking about it. It makes sense with a lot of things that have been going on, but we don't even, literally no one knows. And always remember, for myself, I try to think about, March of 2020. I just assumed I was headed for a 2-year bloodbath in all my investments. And then you look up 6 months later and it felt like everything was up 100% as far as what I was invested in. So we just have no idea. For all we know, things could start going back up literally tomorrow morning. So try not to panic too much, and try to be in the moment as much as possible. Take advantage of every single day, while you're still employed. I mean, not to say that you won't be, but while you're still employed, be the best you can at your job to avoid that. If there are layoffs, make yourself, necessary to the company and all those different things. So don't panic too much. Don't go into panic mode in any area, because we just don't know. So I'll start wrapping up, just because, like I said, I didn't want to make this super long. I wanted to make this concise and give you guys a couple pieces of advice to maybe think about or maybe consider as we enter this period of time. But if you did find some value, I hope this was helpful. Please go ahead and share that with someone, because that is the best way that this platform grows. And obviously, you guys know that in order for me to become the #1 personal finance podcast in the world, I will need your support. So please go ahead and share it with someone. After that, just make sure, if you, once again, found some value out of this, please leave us a review, like on YouTube, or leave us a review on your favorite podcasting app. Those help tremendously, obviously. Yeah, I wanna get feedback from you guys on what you guys took from it, what you enjoyed, what you disagree, things of that nature. But as always, make sure you're subscribed, things of that nature. But you already know, make sure that you're taking the steps today to ensure that you're 1% closer to your goals than you were yesterday. Have a great day, everyone. I am glad that I was here with you today. Bye-bye.